Hey, it's Soleil, and this is 183 of the Orange Pill Investor. And today I want to talk about MicroStrategy and that it is the answer to every bullish strategy. So while this is not financial advice, and this is certainly not a prediction for what's going to happen at the earnings call tomorrow, I have no idea. Just like every other stock, it will either go up, down, or stay the same. So I have no idea what's going to happen after earnings or day to day on the short term. It's very volatile. So uh, definitely don't take my advice with and do your own research and all of that jazz. But for me, it's the most important stock in the stock market, maybe of my lifetime. I'm gonna give Tesla a close second, and but I'll come back to that later. So buy and hold. If you're going to hold the stock for, more than just a week, if you're going to hold it for a year or 5 years or 10 years or 20 years, buy and hold's going to work. The strategy that I use, I sell covered calls. It's going to work. It may be better or worse than buy and hold, but that's not really what I'm talking about. What's the optimal strategy? I'm just saying, if you're choosing a strategy and it's a bullish strategy and your time horizon is not 48 hours or something ridiculous, short-term trading. And hell, there's probably some momentum trades that would MicroStrategy would be the bullish answer to those as well. Um, but buy and hold, MicroStrategy. Selling covered calls, MicroStrategy. Put credit spreads, MicroStrategy. Debit call spreads, MicroStrategy. Uh, long straddles, long strangles, MicroStrategy. Those benefit if the price of MicroStrategy actually just simply just does not stay the same. If it has a rapid change at any particular moment, those will benefit. So yeah, a straddle, if the stock tears up or tears down, that's going to be profitable. And that sounds like, oh, well, I'll just do that all the time. But these are probably all straddle losers. Like, this is just kind of trading sideways. You might make a little bit of money when it gets here. Oh, you might make a little bit of money when it gets here. But what you really want to see is, you want to catch this 1100 to 1700. That might make you some money depending on the strikes you pick on your straddle or strangle. I really don't even mess with those. I'm just mentioning them because they can be considered bullish strategies. If you're a dividend trader, there's MSTY. I'm sorry, yeah, MSTY is the it's kind of like a bastardized dividend. They actually do their own covered call strategy, and then they provide the profits based on some formula, and then they issue it kind of as a dividend. So it's not a true dividend necessarily, but if I just wanted to collect dividends, I'd go with MSTY. Again, not financial advice, but and here's where here's something that got me thinking about it. So this is an article from Chris Cole's his capital management company, Artemis, and he was inspired by a metric in pro sports called the wins above replacement. And he actually named this one after himself. So this is the CWARP. So his name's Chris Cole. Cole wins above replacement. And the wins above replacement in sports is basically like the best example that he gave in an interview was Dennis Rodman. Dennis Rodman doesn't really score. However, if you put him in the game with a scorer and you replace, probably the most famous example is with Michael Jordan. And if Dennis Rodman gets 10, 20 rebounds a game and he gives Michael Jordan an extra 10 to 20 shots, bad things are going to happen for the other team. So anytime you replace a player that's a shit rebounder with Dennis Rodman, the team starts to win more. And he started thinking about how to do this with portfolio. And I'll put a link to this. It's not behind a paywall or anything, but you do have to put in your email address in order to get access to this. And there's a metric ass ton of formulas that I don't understand. I basically skimmed most of it, but and there's criticism of the Sharp metric as well, which kind of measures your profits per risk metric, and a lot of investment managers will be try to get the highest Sharp ratio they can, and that doesn't necessarily translate towards wins. And so when I'm looking at my portfolio and I put MicroStrategy in it because I think that's the best, and then some asshole says, well, you have to diversify with 25 other tickers to make sure that you reduce your chances of failure. Statistics prove that if you have all of these different stock tickers uncorrelated, then you're less likely to go bust. However, when you start to grok Bitcoin, and then you see the way that Michael Saylor described it being a triple maxi, basically borrowing and gathering leverage and basically just tripling down on an asset that you believe is unprecedented in human history and is basically an alternative to the rigged system. If you start to see that and you become orange pilled and you got your laser eyes, then you start to see what MicroStrategy is doing, and they're just the apex predator. Quant Bros and I used to trade MicroStrategy before I heard my first Quant Bros episode, and I kind of just treated them like a leveraged Bitcoin play. And when I saw that first Quant Bros episode, I was like, oh, this is different. This is something that I did not understand and probably still don't completely understand. But it was like, okay, now I'm paying attention in a different way. And so if I try to ask myself, okay, I have 100% allocation to MicroStrategy. Now, what am I going to add to it that will get me more wins? What's going to appreciate more than MicroStrategy? And the answer, as far as I can tell, is nothing. Now, if I was completely taking my own advice, I would just have 100% allocation to MicroStrategy. However, I'm pretty bullish on Tesla as well. I also think that they have a monopoly, and not just the monopoly that everyone is aware of in the EV space, but they've got a monopoly on the data that they need to solve full self-driving, which will also be the real world data needed to solve the humanoid robot problem of interacting with physical space. I didn't intend for this to be a Tesla video, but I think that Tesla probably gets a pretty high CWARP as well. I'd replace every other single stock in the stock market with Tesla except for MicroStrategy. And I know I've already said this is not financial advice twice, but I guess I got to go for a third time because the tiny amount of diversification that I have in my portfolio is probably terrifying to most money managers, most investors outside of the orange pill space. So I'm not recommending that anybody do anything. I'm just explaining my position. And so, however, my exchange does not like 100% allocation. So I I have a little bit of an out by putting in, I don't know, was it like 20% of my portfolios maybe in Tesla? And the reason is because I was at like 95% MicroStrategy, and I tried, and it was dipping, and I tried to buy more, and they're like, nah, you can't buy more. This is a concentration risk, and it flagged my account. Now, of course, I trade on margin as well, which, again, not financial advice. That's 4 times. Margin can get you bent over if you're not careful, and even just today, I had to do some switcheroos between accounts because 3 days prior to earnings, apparently Tasty Trade will amplify their margin requirements. So I went to bed with a very comfortable amount of margin. I felt I had like $88,000 worth of buying power. Now that was on margin, so I was using up considerable amount of margin. However, I was anticipating, okay, if MicroStrategy drops 20%, I'm good to go with 80K of buying power. And I've got some, in case of emergency, break glass things in place too. I can make some deposits, or heaven forbid I open up cold storage and sell off some Bitcoin if I had to. But I woke up the next day and I had negative like negative 12,000 or something stupid. And the price of MicroStrategy had only dropped by like $100, which should have only dropped my buying power by like 25,000. So the troubleshooting folks at Tasty Trade are very good, and they showed me the link that says, okay, we're going to increase your margin, our margin requirements by 50% 3 days before earnings. So I guess it's to protect me against myself, and actually that gets me a little bit of confidence that I was choosing the correct amount of margin to use, because the extra caution that they forced me to take was very close to my buying power. So it ate up to 88 grand, and if the price of MicroStrategy hadn't dropped, I'm guessing I would have still been safe. So I think that's kind of I guess I'm patting myself on the back there. I think the amount of buying power and margin that I was using was probably pretty decent, since the extra 50% pretty much brought me to no buying power. So I guess that's good. But I don't see any other stock that I would replace MicroStrategy with, other than, some small portion of Tesla. And I like the idea of using them as a pairs trade, because if you're going to be holding MicroStrategy for 5 years to 10 years, and you can withstand the potential of Bitcoin going through some bear market cycles and Bitcoin dropping 75% and MicroStrategy dropping maybe 75%. If you got diamond hands and you can just weather that storm, great. But I imagine myself kind of using MicroStrategy and Tesla as a bit of a pairs trade. You could argue that they're somewhat correlated because Tesla owns some Bitcoin, but I think at least 90% of Tesla's valuation is just their EV sales, their energy storage, their AI, and basically a call option on humanoid robots, billions of them. And right now, Tesla's just down. They're probably in between ramping for their semis, their Cybertrucks, and all of that jazz. So to me, if MicroStrategy pumps during the next bull market over the next year and Tesla's still ramping and kind of floundering, to me that's just a no-brainer that I will transfer some of those profits in MicroStrategy, should they come, over to some Tesla shares. And then if Bitcoin does continue the 4-year cycle and they shit the bed through 2027, then if the gods smile on me, which in general the market usually acts in such a way as to cause maximum pain, but if the market gods shine a little light on me, then it might work out that I can transfer some money into Tesla before the money really starts rolling in on full self-driving and the robo taxis, and maybe a 25K vehicle could be getting ramped up by then. So, take a look at this if something like this interests you. And I'll be talking about some of the other bullish strategies. Selling covered calls and cash secured puts is just so easy mode. That's what I cover 90% of the time. But I may try to become a little bit more of a sniper with it, be a little bit more conditional with when I sell covered calls. Maybe I'll hodl a portion and then sell covered calls on another portion. I guess I'm kind of doing that now because every time MicroStrategy dips, I'll buy long calls, and I'm not selling any covered calls against those. So I definitely have some long delta at all times that is uncovered. But put credit spreads and call debit spreads are both bullish, and people refer to them as defined risk trades. And while that's largely true, there are some very weird scenarios that can occur that can cause them not to be defined risk. So I'll definitely cover those weird things that can happen when I cover those strategies. But for now, I'm just excited about MicroStrategy, and it's basically the solution to every bullish strategy as far as I can tell. And that's the polite way of saying that every other ticker not named MicroStrategy is a loser. So maybe not necessarily in the short term, but for people who believe in Bitcoin, it's kind of a done deal. It's just a matter of time, I guess. So with that, I'll end it here, and be good, y'all.